All right, guys, we're in the second day of our new series where we're doing a different topic each day, and today is Mailbox Wednesday. So on Wednesdays, I'm going to talk about a question, either a specific question I've received or something that I often receive and have to unpack for clients or prospects. So today we're talking tax brackets, and this is something that's really confusing to a lot of people in terms of how tax brackets work, what happens when you move into another tax bracket. And so I'm going to unpack that, give you some examples. Keep in mind that what I'm going to tell you is not the actual tax brackets. I'm going to use very simple examples. That way we can use very simple math. But I think it'll make the point that I'm trying to make. So the tax system, at least the federal tax system, is a progressive tax system. And what that means is your tax rate goes up as you get to higher levels of income, right? So you might have some income that is taxed at 10%, some at 12, some at 22, 24, on and on and on, up to 37%. Okay, those are the tax brackets. I'll start with the myth, and then I'll unpack things. A lot of people think that when they get to a new tax bracket, let's just give you a very simple example. Let's just say at $50,000 of taxable income, your tax rate gets to 12%. And once it exceeds that, maybe from 50 to 100,000, it goes up to 20%. Again, these are not actual numbers, but it'll make my point. It does not mean that once you make $51,000, that all of your money is taxed at 20%. It just means the portion that exceeded the last bracket is taxed at that rate. So in that example, $1,000 would be taxed at 20%, and the first 50 at 12, I think was the example I gave you. And that's a very common misconception people think. You'll even hear people say, well, I don't want to make any more money this year. It's going to put me in a higher tax bracket. That is nonsense. That's silly. So what I would say to that is, every time you make more money, yeah, you'll pay tax, but you'd always rather make the money and pay the tax, which is just a fraction of the money you make, right? In that example, where if you made another $1, it costs you 20 cents of tax. Yeah, it costs you more than 12 cents, but you still come out ahead than not making that $1, right? 80 cents is still, is not as good as 92, but it's better, or excuse me, at 88, but it's better than nothing. So when you're thinking about tax brackets, just understand that as you work through them, only the portion of your income in that bracket is taxed at that rate. So again, very simple example. Let's just say the 10% bracket is taxable income of $0 to $10,000, and the 12% bracket is from $10,000 to $20,000. If you made 20 grand, you would have 10% on the first $10,000 to $1,000, and then 12% on the next $10,000. So $1,200, your total tax would be $2,200 in that example. So very common misconception. Not all of your money is taxed at the highest tax bracket you get in, just the portion that exceeds the end of the last bracket. So wanted to leave you with that. Tomorrow we're going to do actually Tax Talk Thursday. I'll break down a little bit more complex of a task. Of a tax concept. And then Friday, we got Fast Friday. We'll give you a tip for the weekend. So like I always say, if you got a question or a comment, drop it below, or a suggestion for a future video, I will surely take that, because chances are a question that you have, other people have as well. So we'll see you on the next one.